traders, this is Blake Morrow with ForexAnalytix, and you were listening to the week ahead video for March 4th, 2018, and we have so much to talk about this week, but before I get into that, make sure you sign up for ForexAnalytix. It's only $1 for 10 days. Got to try it out. You've got to try it out. And once you do that, make sure you download the mobile app so you have all of our analysis in the palm of your hand. But like I said, we've got so much to talk about, so let's get to it. This week that's coming up, we have, let's see, we have the Bank of we have the Bank of Canada, we have the RBA, we have the ECB, and we have the BOJ. Did I miss any? No, I think I got them all. But then we also have non-farm payroll at the end of the week. On top of it is what's happening over the weekend with all of the political risk in Italy and in Germany. So this open is going to be really important when you talk about what's happening Sunday night, Monday morning for those of you that are in Asia. So much happening, and there's a lot of charts that we need to get to. So I'm just going to I'm going to dive right into it. The biggest thing that we have to contend with, well, actually the first thing, not necessarily the biggest thing, is going to be, the Italian elections, and then also the German SPD vote. So what happens with the euro is going to be really important right at the open. And what we'll notice with the euro dollar in particular is that we are back challenging the underside of the channel. So that's important. Because it is very where we go from here is probably going to set the pace for the euro dollar moving into this next week. And we challenged the underside of the channel and this trend line, but also keep in mind that we posted a false breakdown. So just like on the way down, and if you recall the week ahead video from a couple weeks back, we had the false breakout to the upside. Well, we had a false breakout to the downside. So technically, that false breakdown to the downside below 122 could set us up for a move right to new highs. So I think if the euro dollar can get above this 123.50, if we walk away, Sunday night, Monday, going into Monday, and the euro dollar comes through unscathed, that really sets up for a challenge of new highs. Now, you might go, okay, Blake, if we're going to challenge new highs, what's next? Well, what's so important about that, and what's so important about this this new high, if we do manage to make it, is that we have a multi-year trend line that comes in to the market right around 126.50, 126.30, and if that breaks, that could be very dangerous for the dollar itself. Also realize there is a 618 retracement that we did reject. So if you get past this key Fibonacci level and you breach the multi-year trend line, the dollar could be in some trouble, and the euro dollar could really be set to move a lot higher. I think there's a lot of probably big money that's been waiting for the risk of this weekend to be passed before putting more money to work or looking for higher prices in the euro. I think a lot of people really want to own the euro, and if we could, like I said, if we can get through Sunday, Monday, and the technical picture looks okay, I think that could set the stage for a much higher euro dollar exchange rate moving forward. I was a little bummed out because I was really hoping that the euro dollar could come all the way down to this breakout point here at 121 before moving higher. But that pullback that we saw, that might have been it. And we all might end up chasing the euro dollar higher going into next week, all of us. So it's going to be very interesting to watch that open. And speaking of which, if you're looking at like the dollar index, let's go ahead and take a look at the dollar index here, because the dollar index had a really important rejection. Because if you look at the euro and you go, well, I wish the euro dollar would have came down to 121, for all intents and purposes, the dollar index itself, it did challenge the breakdown point. So the breakdown point was at 91, and we tested 91, and we rejected 91. So that means that this downtrend is very much still in play, and we might have a little wedge here, we might have a little descending wedge, but frankly, if we break below 88, there's not a lot stopping. There's a lot of open space below 88 in the dollar index, and if you really just take a look at the dollar, and you can go, okay, well, you know, how's the rest of the market look? You know, how about the pound? How about the Aussie? How about the Kiwi? Well, a lot of these currencies held some pretty important levels, but if you look at the dollar yen, which, you know, the dollar yen has been, if you guys have been listening to these videos for, you can go back and listen for the last several months and go back into the end of last year. I'd really been very bearish the dollar yen up in the, you know, 113, 110 level and all the way down. But if you look at the dollar yen, we're breaking a big long-term channel. So if you're looking for any type of contradictory or contrarian type of moves in the dollar yen, you're not going to find it regarding the dollar, because the dollar yen is bearish by every stretch of the means, technically. So, you know, when you got the dollar yen and potentially the euro dollar moving in the same direction, that's not going to be a very good technical picture for the dollar index. I do want to throw out that you know, the Kiwi dollar, let's go over to the daily chart. Actually, the Kiwi dollar was one of those currencies that I was looking for a potential double top, and the problem is that we really found support ahead of the 200-day moving average, which if we can hold here at 71.50 and really start breaking back into the mid 70s, we could take out these highs, and then you'd have a double bottom and a really big move higher. And I'm not a Kiwi bull by any stretch of the means, but I'm the charts don't lie here. We could be setting up for a pretty big dollar sell-off, and it's going to end up being across the board. And if you look at the, I guess I might as well just take you over to the Aussie since we do have the RBA this week. If you look at the Aussie dollar, you know, the Aussie dollar might have hit a new low, but maybe that ends up being a false breakdown. And if we get back above the 200-day moving average, which probably sucked in a lot of shorts, we get back above the 200-day moving average, we can end up having a squeeze higher in the Aussie dollar as well. And if you start talking about, you know, the tariffs that U.S. is putting on other countries, you know, I think a lot of people probably sold the Aussie as a response, but maybe the Aussie still gets a short squeeze here. So it's going to be very interesting to watch how all these majors play out this next week. Now, I did want to talk a little bit about the U.S. stock market, because the stock market did have a very ugly move early in the week. We could see how the S&P came down, but on Friday we actually rallied back, and we created a hammer candle. Now you might go, well, you know, that's pretty bullish there, and we rallied off the 50% retracement. But it's not just the S&P. You have to take a look at the other markets too. Like if you look at the Dow came down, but we really pivoted off of a important trendline support here in the Dow Jones Industrial Average, and also, you know, 127% extension of this last move. You can see this last move here. We hit the 127% extension, and we're bouncing. But it's not just there as well. Let's take a look at the NASDAQ. Then, whoops, that's the NASDAQ right here. The NASDAQ had a very shallow retracement, only a 38% retracement. That's pretty bullish, actually, if you think about it. Very shallow retracement usually leads, if we rally here and we break new highs, that could lead us to all-time highs in the NASDAQ. And then also the Russell, you know, had a pretty big pivot off of this channel support. We had a false breakdown, but we're still respecting this channel. So the U.S. indexes continue to look fairly supportive, at least for now. And if the dollar does continue to sell off, and we look at the euro dollar, and the euro dollar ends up rallying to new highs, the U.S. indices like the weak dollar. We've seen that time and time again in recent months. So if stocks continue to rally, then the dollar may continue to stay under pressure. That correlation may stay true. So guys and gals, if you like this video, make sure you click the like button, or on YouTube, make sure you click that thumbs up button. And if you haven't subscribed to our channel, make sure you do that so you don't miss any of these videos. But more importantly, all of the free videos that we do throughout the course of the week, and the webinars that we post them out here on YouTube, so this way you don't miss any of the interviews that Dale Pinkert has of so many industry experts. So thank you guys and gals for listening in. Good luck this week. It's going to be a very busy week, and trade safe out there. My name is Blake Morrow with ForexAnalytix. Thanks for tuning in.